While it may have been a bit of a choppy week for us, it's more important to also take stock of all that's going on then across the globe. And it's interesting, given the fact that we do have Wall Street indices which have logged over a 1% gain for the week gone by. In fact, it was a pretty robust rally that played out across the Dow Jones, the S&P 500, which incidentally on Friday's trading day managed to hit live highs. Clearly, it's the economic sentiment that seems to be on top of mind for investors, and that seemed to have buoyed Wall Street. Now, the commentary from the key Fed officials and the speeches that come out from the same are going to be very closely watched. But having said that, a 1% gain on the Nasdaq, you had the S&P 500 comfortably in the green, and 1.3% for the Dow Jones. How do we stack up in comparison? Well, not bad with the gain coming in for the frontline index, at least for the week gone by. But for the most part, barring the Nikkei, it seemed to be gains coming in across the board. There have been updates as well, with Trump warning the BRIC nations of a 100% tariff on the de-dollarization. The US 10-year Treasury yield has fallen for the second straight week. But Nikunj, just encompassing all that we've seen from across the globe, it seems to be key economic readings that the street will be watching out for.
If I look at last week's market in isolation and only talk about India, I think price action was more than satisfactory. You have to look at the market sentiment, not every time the connect between large cap stocks and mid cap stocks. So I think markets, they stopped falling. We saw a monster comeback in Adani group of stocks. FIs, barring that Friday's number, were not really rampant sellers. And then in terms of the market comeback, the PSU stocks, surely, and especially PSU banks, they made a comeback. So the week gone by was an encouraging week. The conversations about what to buy, have markets bottomed out, they've started again if you really speak to market men. So for me, if I just map last week's price action, it was not bad. But what really could pour cold water on the excitement is the macro data, whether it is GDP or on the GST front or auto sales. The economy is slowing down, folks, and we need to embrace that. Now, as we move forward, we'll talk about it, that how much of the slowdown is in the price, why was the GDP data poor, auto sales a bit of a mixed bag, and GST also seems to be showing signs of a slowdown. So to make a case that we are likely to really leap forward based on the macro data, what we've got over the weekend, looks difficult to me.
Okay, fair enough. But as you said, it was pretty satisfactory for the week gone by. And yes, indeed, it was. As we wrapped up around the 24,131 mark for the frontline index, it was IT that actually managed to hold out quite comfortably, and the broader markets gained for the second straight week on the trot. The Nifty was trading above the 20 daily moving average, and from the September lows has managed to gain quite smartly. It's been in a range when it comes to the Nifty Bank Index, so 51,800 to 52,500 are the levels that the Nifty Bank Index has been in. But in terms of the overall picture as well, when it comes to the foreign selling, that continues unabated. And Nikunj, just going by those cues, what's in store for the markets from here on?
Siavan, while the GDP data is something which is glaring on your face, and it is well below what the RBI estimates were, and now there is a serious risk to the downside that economy is slowing down, government spending is yet to pick up, liquidity is tight. That in a sense will continue to be this eyesore in the market. My limited point is that markets knew this was coming. And that was empirically evident in the way how markets and economy related stocks and how other key stocks which are a pure proxy to domestic economy, they have already corrected in the month of October and November. Markets always look at not where the puck has moved, but where the puck will move. And now we need to identify that, do we have a bottom in place in terms of GDP growth, and have the GST drop what we've seen, has that also bottomed out? And I think there is a reason to believe that both on the tax front and also on the GDP front, we have a bottom in place, because government spending should pick up, RBI should tighten liquidity, and I also expect that there would be no big cut in the tax transaction. So if you put all those parts together and then you say where are markets headed in the month of December, I don't expect a lot of downside in the market. I expect that the bias would be positive. I expect that FI selling, which in a sense seems to be reducing, is coming down, and I think we should be in a last hurrah before the year ends. I purely go by the market mood and the temperament. A lot of bad news has been thrown at the market. Global news, local news, slowdown, Adani group of stocks. But markets are looking settled, which means the markets for the moment are not reacting to bad news. In fact, the reaction to the bad news is almost over, and last week's price action seems to be establishing that. So just because the GDP data is bad or is poor or below estimates, I don't think this market is just going to reverse on basis of that, because markets knew this was coming and stocks have already corrected in anticipation of this.
Okay, fair enough. That's the overall macro setup as well. We had the GDP growth that slipped to about 5.4%. The November GST mop up at about 1.82 lakh crores. And in terms of the auto sales numbers for November, it did come in as a bit of a mixed basket. But that being said, stepping into a brand new week, and there's lots to watch out for as well by way of indicators, and they're all flashing on your screens. We will have the Powell speech and the Fed beige book, so that's going to be key to watch out for overseas. The MPC meet back home. We've been monitoring crude oil prices, the OPEC plus meet as well, and you've got some commentary that is coming out from the BOE governor as well, the speech, and the global manufacturing PMI for the S&P. All of that as well will be closely tracked. So Nikunj, what do you think would be on top of mind when it comes to investors for Qs this week?
See, it's MPC meet, and especially on the backdrop of what we've got on the GDP front. And that's where, we always think that, okay, RBI has got some magic wand, and if GDP is bad, they can fix it. If GDP, if inflation is strong, they can fix it. No, I think RBI, in their own judgment, they, in a sense, can do only little. But given that this week we have the MPC meeting, and it is coming at a time when Reserve Bank of India's own estimates of GDP projection for FY25, they would be challenged seriously, and now there is a serious risk on the downside. What will RBI do? Will they increase liquidity in the system? Will they increase OMOs, or will they drop a clear hint that now they need to cut the rates, repo and CRR? Because up until now, the Reserve Bank of India governor had no problems in establishing that we were in a high growth regime. If we are in a high growth regime, then how things are looking up. Also remember that what we are discussing are October data point. I mean, this is valid for the quarter gone by. RBI will also have data for the month of November, and that in a sense could be a forward indication on their view on private sector capex, rural economy, and key sectors like mining, electricity, manufacturing have they slowed down. So I'm sure there would be a mention of that in the MPC meeting. So that in a sense becomes a central news event. Apart from that, this week market surely will react to auto dispatch numbers. Market surely would react to the OPEC meeting, which is more like a global event. But barring that, I think it would be the pull and the push of liquidity and technicals which really would be at play. And I get a clear sense that looking at last week's price action, the market is now showing signs of bottoming out, or is showing signs of picking up fresh inertia.
If you like this video, then like, share and subscribe to ET Now.